Good morning, ladies and gentlemen, and welcome to IRB Infrastructure Developers conference call for discussing the financial results for the quarter ended June 30, 2023, along with recent developments. We have with us on the call today Mr. Virendra Maheskar, Mr. Dhananjay Joshi, Mr. Sudhir Hoshing, Mr. Anil Yadav, Mr. Mehul Patel, Mr. Tushar Kavedia, Mr. R.S. Sharma, and Mr. Amitabh Murarka. As a reminder, all participant lines will be in the listen-only mode, and after the opening remarks by the management, there will be a question and answer session. Please note that the duration of the call would be 45 minutes, and any queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. I now request Mr. Yadav to give you an overview of the significant developments during the quarter. Thank you, and over to you, sir.
Thank you. Good morning, everyone. I welcome all the investor and analysts to our earnings call for Q1 of financial year 24. Hope you all have been able to go through our detailed numbers as well as the presentation which we have released yesterday. I am pleased to inform that IRB Golconda Expressway Limited, the SPV incorporated to implement prestigious Hyderabad Outer Ring Road project agreement with Hyderabad Metropolitan.
Sorry to interrupt you. Sir, we are losing your audio. Participants, please stay connected while we rejoin the management back to the call. Ladies and gentlemen, thank you for your patience. Apologies for the disconnect. We have the management reconnected. So go ahead.
We are extremely sorry for inconvenience. I think there was some disturbance in the telephone line. Hope I am audible.
Yes, sir, you are.
Good morning, everyone. I welcome all the investor and analysts to our earning call for Q1 of financial year 24. Hope you all have been able to go through our detailed number as well as the presentation which were released yesterday. I briefly cover the key highlights for the quarter. We are pleased to inform that IRB Golconda Expressway Private Limited, the SPV, incorporated to implement the prestigious Hyderabad Outer Ring Road project, has now executed the concession agreement with Hyderabad Metropolitan Development Authority for the project of tolling, operation, maintenance and transfer of Nehru Outer Ring Road in Hyderabad, Telangana state. The financial closure for the project is in an advanced stage. Samakhali Tollway Private Limited, the SPV, has also executed the concession agreement with NHAI for the project comprising of upgradation of 6 laning with paved shoulder of NH27 from Samakhali to Santalpur section in Gujarat. Financial closure for the project is expected soon. Recently, investment manager of private InvIT has taken definitive steps to issue units aggregating up to rupees 2,862 crores by way of rights issue. The proceeds of this issue will be utilized for infusing equity in Hyderabad ORR project. We anticipate that both these projects, one BOT, one TOT, will commence during the second quarter. These will meaningfully contribute to construction vertical as well as toll revenue, and full impact will be visible in Q3 onwards. Further, as you are aware that the second half of the year is normally more robust than the first half in terms of EPC as well as toll revenue. Meerut Badayu Expressway Limited, that is Ganga Expressway Project SPV, has allotted NCD of 542 crores on private placement basis to the company and GIC affiliates as a part of equity for the project. The company and GIC affiliates have contributed 276 crores and 266 crores respectively. The construction activities are progressing well on this project. Toll assets in IRB witnessed 15% growth year on year in toll revenue in Q1 of FY24 as compared to Q1 of FY23. The lower traffic growth in Mumbai-Pune is on account of construction activity on expressway and the temporary closure of the connector road, that is Mumbai bypass, which acts as a feeder route for NH4. For the assets of the private InvIT, we have witnessed stronger growth in toll revenue, which were higher by 22% in Q1 of FY24 as compared to Q1 of FY23. We envisage continued strong growth for all assets across the portfolio. The order book for company now stands at 33,700 crores. Within this, EPC order book is roughly 8,500 crores, providing good revenue visibility for 2 to 3 years for the construction segment, and further bolstered by 3 years executable O&M order book of close to 2,500 to 3,000 crores. The strong order book position provides high visibility for construction segment and is supported by a favorable trend in toll revenue. Added to this, the commencement of recent project win, that is Hyderabad ORR and SSBOT, which are set to contribute meaningful to both the segments shortly. These factors gives us a confidence for a healthy performance in Q3 and Q4 for this financial year. Now, I will just touch upon one-time income impact and how the things look like. Q1 of FY24 is not comparable with Q1 of FY23 due to one-time impact of claim income on account of Amritsar Pathankot of 418 crores in Q1 of FY23. This led higher revenue to the extent of 418 crores, EBITDA by 373 crores, and PAT by 279 crores. If we adjust one-time income, revenue growth is around 11%, EBITDA growth is around 17%, and PAT growth is 59%. Now I will request Sri Tushar to cover the financial highlight for Q1 FY24. Over to you, Tushar.
Thank you, sir. Now I'll take you through the financial analysis of Q1 FY24 versus Q1 FY23. The total consolidated income for Q1 FY24 has decreased to rupees 1,745 crores from rupees 1,995 crores for Q1 FY23, decreased by 13%. After adjusting the one-time income, the consolidated income for Q1 FY24 has increased to rupees 1,745 crores from rupees 1,578 crores, increased by 11%. The consolidated total revenues for Q1 FY24 have increased to rupees 613 crores from rupees 527 crores, and increased by 16%. The consolidated construction revenue for Q1 FY24 has decreased to rupees 1,133 crores from rupees 1,468 crores, a decrease by 23%. After adjusting one-time income, the total construction income for Q1 FY24 has increased to rupees 1,133 crores from rupees 1,050 crores, and increased by 8%. EBITDA for Q1 FY24 decreased to 889 crores from rupees 1131 crores, a decline of 21%. After adjusting one-time income, EBITDA for Q1 FY24 has increased to 889 crores from 759 crores, increased by 17%. Interest cost has slightly decreased to rupees 381 crores in Q1 FY24 from rupees 385 crores, down by 1%. Depreciation has increased to rupees 237 crores in Q1 FY24 from rupees 203 crores in Q1 FY23. PBT has decreased to rupees 271 crores in Q1 FY24 from rupees 543 crores in Q1 FY23, down by 50%. After adjusting one-time income, PBT for Q1 FY24 has increased to rupees 271 crores from rupees 171 crores, increase of 59%. PAT after share of JV has decreased to rupees 134 crores in Q1 FY24 from rupees 363 crores in Q1 FY23, a decline of 63%. After adjusting one-time income, the PAT after share from JV loss for Q1 FY24 has increased to rupees 134 crores from rupees 84 crores, an increase of 59%. Now I request moderator to open the session for question and answer.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Alok Devra from Motilal Oswal. Please go ahead.
Good morning, sir. Sir, just some color on the order pipeline now. So what's the outlook for this year, considering we have the upcoming elections? So how are you looking at the order inflow? Any guidance on the order inflow target for this year? And also which kind of projects we are looking at to be bidded out in this financial year?
Yeah, good morning, Alok. I think you touched upon a very important point. When it comes to the order intake, our preference will continue to be BOT, TOT and HAM in that order. At the moment, the order book seems to be quite robust and has a good visibility of next 2 years, given the construction order book of almost 8,500 crores, and add another 3,000 crores of the O&M order book that would be executed. The focus of the company certainly is to establish a more robust and a stable order book, which will emanate out of TOT projects, because that order book will have a much longer shelf life and also better margins. So keeping that in mind, as I said, the focus will be BOT, TOT and HAM in that order. Coming to the order possibility, I think at the moment NHAI has talked about 6,000 crores of 6,000 kilometers of order outflow for the whole year. And they have also talked about monetizing almost 40 packages on TOT basis, which would continue to be a part of interest to us. And I think given the well-capitalized balance sheet, we would like to put more resources to work and establish a good portfolio of revenue-generating assets and also thereby generating a good amount of order book for the O&M vertical.
Sure. So, any broad number we are looking at for order inflow?
So I think the way we always look at is try to build back order book at least 20% higher than what we will be burning out in the present financial year. So at least 5,000 to 6,000 crores of order intake is what we would like to build back, assuming 80% of that will be a burn rate for the present year.
Sure. And also, this new project, we are expecting it to start from Q2. But typically, we have seen during the monsoon period, projects don't really get started. So, any slippage there, there is a chance of any slippage there in getting these certain new projects getting started on time.
So, both these projects are, one is a TOT project, so there is not much capex as such involved. So it's more of achieving the financial closure and taking over the project. And even the other project, Concall is also a 4 to 6 lane project where the toll revenue is to come in from day one. And it is an operational 4-lane highway which is to be upgraded. So it's not a HAM project with a greenfield kind of nature where you have to wait for land acquisition and monsoons to repeat. These packages, our sense is that they are something which can be tackled immediately upon achieving the financial closure.
Sure. Just last question. So what kind of growth we are now looking at after this, some of these new projects are also getting into the execution side. So what's the construction growth we are looking at for this financial year and next financial year?
Construction, I think the construction vertical should continue to grow at around 15 to 20% CAGR rate that we have been able to maintain over the last 15 years.
Sure. Thank you so much, sir, and all the best. I'll come back in the queue if I have more questions.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Thank you everyone for the opportunity. My first question related more to the private InvIT. It would be useful to get some sense on a full year basis last year as well as 1Q. What would be the aggregate numbers of, let's say, revenue, EBITDA, and net debt? The endeavor is to understand the pace at which cash flows can be generated from that portfolio for the parent.
Yes. I think private InvIT is doing a run rate of roughly 200 crores and on a monthly basis. And on a full year basis, we are expecting around 2,500 to 2,600 crores of revenue from the private InvIT. And roughly 700 odd crores will be revenue share. So then around 1,800 to 1,900 crores will be EBITDA. And will be the net toll collection, and thereafter roughly 200 odd crores will be O&M expenditure. 1,500 to 1,600 crores will be EBITDA. And private InvIT as of now has only little less than 10,000 crores of debt. And considering that kind of debt, there will be a surplus in the private InvIT, and the debt repayment are back-ended. And in fact, last year we have refinanced 3,000 crores of debt, where there is a bullet repayment and interest cost is also fixed at 0.7%. Considering all those things, the private InvIT will have a positive cash flow, and which will be used for distribution to the unit holder.
Understood. So the way I assess it is that the incremental projects that are going to be added will any which way see funding through separate means, let's say the rights issue that you are doing. And the existing projects should basically start generating cash flows from FY24 onwards, right? And the way you are suggesting is probably a 9% blended interest cost on a 10,000 crore book. You'll probably be generating 500 to 600 crores of cash flows, slightly less so post-tax. Is that a fair way of understanding?
Yes, that's the fair way of understanding. And as you rightly mentioned, the surplus will be utilized for distribution, and the equity requirement will be through a rights issue.
Understood. Again, just a clarification, the two projects that you are talking about, financial closures being imminent, will be booked as revenues in the private InvIT. They won't be impacting the toll numbers for the Concall entity. Am I right on that?
Yes, you are absolutely correct, but that will reduce the share of JV from the private InvIT, which gets as one line item in the consolidated of IRB.
Yes. So if today you are doing on a reported basis a 50 crore loss, right? In 1Q, that's a number from the private InvIT and everything put together. When do you envisage this number starting to become a positive number?
I think in 50 crores, there is a one-time expense of around 20 crores net impact. So roughly the loss is in range of close to 20 to 25 crores. And that has started improving. If you look at the previous quarter, the loss was around 35, 37 crores. That has now reduced to 25 or so. So this financial year, we are expecting the loss will get nullified, considering the start of Hyderabad ORR project and the Samakali project.
Understood. So the way I understand it is this is a naturally reducing trajectory of losses, and with the two projects that you have won starting to contribute, that will only get accelerated. And let's say by the end of the fiscal year, this line item may start turning around on the other side.
Yes.
Okay. Got that. Those are my initial questions. I'll get back into the queue if I have more questions. Thank you.
Thank you, Aditya.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question. Just a small clarification.
Prem, you're not audible at all. May I request you to speak through the handset, please?
Is it better?
Yes.
Yes, please.
So, yeah, thank you. Thanks a lot for taking my question, sir. So just a small clarification on this question. To continue with the losses in private InvIT. So what was the one-off in this quarter? Because the losses went up in this quarter.
Yes, there was a fair value loss on account of payable, and that was close to 40 to 45 crore. The 51% payable to IRB. Around 3 to 5.
Sorry to interrupt you. We are losing your audio.
Hello. Hello.
Yes, sir. Now it's fine.
Now it's fine. So, Prem, there was one-time impact of 40 to 45 crores, and due to that, the impact, 51% impact was on the share of minority. So that was roughly 20-25 crores. And if you remove that, the losses is in range of around 25 crores, which has reduced from 37 to 25 crores.
Sure. Okay. Yeah, that explains it. And second was essentially, so I was reading this media article wherein it comes as if, someone seems to have filed a PIL against our Nehru Outer Ring Road project. So if you could, explain why exactly is the issue. And second is, would that delay the process of kind of getting that project come to you? Let's say not material delay, but then could it be as if, it will be some time before we would get to have it come to us?
We have not heard of any stay or any restraining orders with regard to the PILs which you just mentioned. And it is more to do with the procedures pertaining to the bid that HMDA had run. They wanted whatever public knowledge we have about the same. I'm just narrating you a part of that. So what they've talked about is about disclosing the ICV and letting the public know what the ICV was. Now you know that NHI also has a policy of not disclosing the ICV, which HMDA seems to have followed. So it's more about what we can say, letting people know about what the procedure is, and lack of that knowledge probably has led to this PIL is what it prima facie looks like.
Sure, sir. I think that explains. Thank you, and all the very best for you. Thank you. That's it from my end.
Yeah.
Thank you. Next question is from the line of Nikhil from HDFC Securities. Please go ahead.
Good morning, sir. Thanks for this opportunity. Am I audible?
Yes, Nikhil.
Yeah. So I just wanted to check with you on the guidance front, like for the full year equity infusion that you are planning to do, the margins and the revenue side. So if you can throw some light on that.
Yeah. So, Nikhil, your question is on the revenue side or construction revenue for this year?
Yes, sir. So FY24, your revenue guidance, your margin, and the equity infusion that you are planning to do.
Yeah. So on our revenue guidance, what we have given even the last time as well, it remains in the range of, say, 12 to 15% higher than what we have achieved last year. So somewhere between 5,000 to 5,500 should be the construction revenue, what we are targeting for this year. Margins should remain stable as we are seeing the material prices have now gone in a declining trend. So we don't foresee any further impact on the margin as such. It should remain stable, what we have been delivering last 1 or 2 quarters as well. So on the construction front, the margins will be stable, what we have been delivering.
Okay. And sir, the equity infusion guidance?
Execution? Balance?
Equity
I didn't get your question. Can you come back?
So your equity infusion guidance?
Yeah, okay, equity infusion. So for FY24, we are expecting an equity infusion of around 800 to 1,000 crores, and for next year around 300 to 500 crores. This is excluding Hyderabad ORR.
Excluding, right?
Yeah, this is excluding Hyderabad.
And what would be the amount for Hyderabad ORR?
Close to 1,500.
Close to 1,500.
1,500?
Yes.
Okay, sir. Those were my initial questions. If I have any other further questions, I'll join back the queue.
Sure.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Parikshit Kandapal from HDFC Securities. Please go ahead.
Yes, sir. Hi. So my first question is on the beauty project pipeline. So what is the active pipeline right now?
Active pipeline of bids, as I mentioned earlier, I think 6,000 kilometers of bidding pipeline is what NHI has talked about. Other than that, there are some 40-odd projects which would be offered on TOT basis. So that is another opportunity which is available. And this is the broad visibility that we are able to figure out at this point in time.
But any identified beauty opportunity out of the 6,000 kilometers?
Identified in the sense, you are aware that we have been bidding for all the TOTs that have come up for bidding as of now. And today IRB enjoys a market share of almost 37% in the TOT market, given the upfront amount that we have committed. So certainly that is one area of interest for us, and we'll continue to explore those possibilities. At the moment, there are 2 bids which are active on TOT basis, which we are evaluating.
Okay. On the BOT side, sir, only like up to 6,000 kilometers, how much do you think government is planning to award on the BOT basis? Because there has been talks that they will ramp up the BOT share in the project award mix. So any sense on this year, what could be potentially the BOT pipeline for us?
We have not yet seen any, while they have been talking about coming up with few projects on BOT, we have not seen any big advertisements coming up. But our communication with them suggests that they would be soon coming out with few BOT projects for sure.
Okay. Just on the rights issues on the private InvIT, so this 2,860 odd crores, 62 crores. So how do we fund our share of this? And also, if we take some more TOT projects, so what is the appetite for GIC to pump in more money? So how big can how big can this platform become further in case, because you're saying there is so many bids on TOT which is coming. So I don't think there is enough appetite in the market to absorb those kind of bids. So how, from the capital allocation point of view, how much is our appetite and how much would be GIC's appetite on putting in more money beyond this 2,800 crores of rights issue?
Yes. So I'll give you a little flavor on this. So you are very right that the TOT market size is not that big and it's confined to a few large funds who also have been bloating with the assets that they have been winning in the recent past. So this is a very interesting opportunity that comes up for IRB given the well-capitalized balance sheet that IRB enjoys today. And certainly with a partner like GIC who has a good amount of appetite available to deploy more capital, I think this will be the best opportunity that will play out for IRB, and we are quite gung-ho about it. So I think you have seen that we have been participating in all the TOTs in the past, and we will continue to participate in the upcoming TOTs. And I think, as I mentioned earlier, it offers us two good possibilities. One, like Anil said, the existing private InvIT portfolio has now started generating surplus cash, which will get ramped up significantly with more projects becoming stable. And it will start generating surplus cash available for distribution, which will be, again, become a part of source to part deploy that surplus back into growing the portfolio. Other than that, the existing IRB assets also are throwing up good amount of cash, particularly Bombay, Pune. So, given the existing cash on hand and the surpluses that the portfolio will be generating, no doubt there will be a good amount of dividend distribution strategy also for the shareholders. But still, even after considering dividend distribution, we will have good capital available to keep growing the book. And given the scarce availability of participants, I think this will be a very interesting opportunity that we would like to play up.
So in terms of appetite, I mean, you're writing a big share, I think 1,500 crores on for the rights issue for your share. And as more bids come in, we have to write bigger checks. So between capital allocation in terms of like all these assets which are becoming a little mature, and you were saying part of that is going to growth and part into dividend. So what could be the mix there in terms of growth, in terms of dividend? And do you think that you still have enough capital to deploy a large check for these activities?
While this might sound a little premature to talk about, but I think we have now created a sizable portfolio of projects which are getting into a zone where they are self-stabilized, revenue-generating, cash-positive portfolio. Now, it will actually unleash a flurry of opportunities. I can give you some flavor, but with a word of caution that there is nothing crystallized or as a approved strategy on hand. But if we just go by the way these portfolios work across the world, a sizable portfolio, you can always look at selling stakes at the project level to unlock significant amount of cash which can be deployed to grow the portfolio. It's not necessary that every time there has to be a fresh inflow of money or IRB putting back money from its balance sheet. The portfolio has acquired a size where with some support and some fresh capital at every time, the multiplier effect can be achieved by just rebalancing the portfolio equities itself. certain amount of top-up money also can be raised because of the surplus cash that the portfolio is generating. And given all these opportunities, I think the ability of the portfolio to add more assets, which would be value creative, I think the portfolio ability is immense.
Just one thing, sir. I mean, because you already have a private InvIT with GIC, so the thing you were talking about is stake sales. Do you think, stake sale opportunity will be largely restricted at the holdco level, which is like a private InvIT level, or even like given the
private InvIT level? I'm saying the assets itself, because we have seen our partners doing that in their geographies. And this is something which is a very interesting opportunity, which we will, as I said, with a word of caveat that there is no specific plan at this point in time. But tomorrow, if there are multiple opportunities that come our way, it is not necessary for us to at all times keep looking at raising capital and depend on IRB to pump money. The portfolio itself is now getting into a zone where it can generate resources for growth.
This is saying that you are open
about.
So you and partner are open to basically selling out stake at the SPV level within the private InvIT.
Yes, that is one large possibility. We can sell down a project to public InvIT if there is a need to raise additional capital. So having a completely evolved machinery that IRB has able to create, where you have an execution vehicle, you have a development vehicle, you have a stable asset portfolio of private public InvIT, I think the way the assets can be played, the possibility is infinite for IRB. We can actually optimize the capital structure and keep creating value immensely. And that's the plan going forward, how we will play it out.
The thing is that you have a structure in place, public InvIT, private InvIT, and IRB standalone. So now things have to flow. I mean, at a private level, now the things are stabilizing, the assets are stabilizing. But from there to move on into public InvIT, so I don't know how that thing can be tackled. So because we have heard you more open on.
All of this will depend on what opportunities come our way. Right now, as I said, each individual vertical is doing well for itself. They are all well funded. The capital has been optimized. Tomorrow, depending on how much opportunities we are able to take in, we can always expand this structure in a very, very efficient way, given the way the structure exists. That's the only point I'm trying to make here.
But at some point of time, is the possibility of private InvIT itself becoming public InvIT?
Private InvIT already is a listed InvIT today.
But I'm seeing as a listed, but I'm saying more like even retail and others like can participate.
We don't want to do that. I think the InvIT level equity, I don't see is going to see much change, where both IRB and GIC are comfortable owning their 51 and 49. But the InvIT assets can generate significant amount of surplus. Asset monetization can generate significant amount of cash flow. Whether you sell a stake in the SPV, you sell a whole of SPV, but that is the opportunity where the InvIT can generate cash flow to take care of its growth. Okay. And one thing more, that whenever the private InvIT grows and takes any more assets, it automatically spins off an order book for IRB to execute the CAPEX and OPEX part of it.
Okay, sir. Thank you, sir. Those are my questions. Thank you.
Thank you. Next follow-up question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Thank you for the opportunity again. My question links more around the ROEs the company reports, and I understand that's not the best way. But do you envisage over the next few years these ROE numbers starting to become a lot more stable in the mid-double-digit kind of zone for yourself as things pan out the way you are thinking through?
Aditya, as you very correctly said, I completely endorse that view that ROE is not the parameter or the barometer to check the company's performance. We are not a pure EPC company. We have a solid asset book, and we have deployed significant capital on these assets, and these are long gestation assets of 20, 30, 35 years. So for them to start generating significant amount of cash is going to take time, and majority of those assets have now become stable and have started generating positive cash. So as we roll forward, this is only going to go up much stronger, and this portfolio will generate immense amount of wealth. So a ROE kind of benchmarking will not be the right benchmark to my mind. DCF of the asset is the right approach to my mind. Just to throw a number, we were just working out few, and we realized that the private InvIT has a shelf life till 2059 in terms of the asset concession life. And over this period of concession, we would be generating a net revenue. Net revenue means net of premiums against whatever projects we have premium payable. Net of premiums, we will be generating a cash flow of more than 3 lakh crores. And that is the kind of revenue visibility that this portfolio has. So I think the returns will be significant, but as I said, this is a long gestation project on which the capital has been deployed. And if we try to look at the return on equity generated from this capital which has been deployed for long-term assets like a EPC company, then I think then we are looking at a very wrong benchmarking to my mind. And as you yourself endorsed, that would not be the most right way to look at it. I think the DCF that the portfolio is generating is the parameter that has to be looked at. What is the DCF accretion happening with additional capital getting deployed?
Understood. Thank you for the color on this one. The next question was more kind of near-term in nature. See, the traffic growth, whichever portfolio of yours I take up, now appears to be kind of moderating down and probably below 5%. Now, there may be project-specific issues as you've highlighted, but is there something more than that makes you kind of think through these numbers on a recurring basis at a lower growth level versus 5-6% that you may have thought otherwise?
I think, Aditya, I will highlight few of the assets of the private InvIT, and then thereafter I will move to the IRB asset. And if you look at the Gulbarga Chittorgarh, there we have got almost 13.4% hike. And if I will remove the 5% tariff revision, the hike was the traffic growth was 8.4%. ADC Aurangabad, there was no tariff revision, only 5% from 1st of April. 24.3% is the growth. If I remove the 5%, the traffic growth is 19.3%. Then I move to Hapur Moradabad. There also the traffic growth is very healthy, but because of the tariff revision, that is not reflecting the true picture, but traffic is more than double digit. Now coming to Udaipur Shamlaji, there is 10.4% growth. If I remove the 5%, then around 6% is the traffic growth. And then we move Kishangarh Gulabpura, that is also not comparable. Then we move to Solapur ADC. Solapur ADC has a 18.9% revenue growth. If I remove 5%, it's a 13.9% traffic growth. So then definitely there are projects in the portfolio, I think more than 6 assets out of 9, which are generating more than double-digit kind of traffic growth. Yes, there are few assets like Agra Itawa where we had there was some temporary disturbance, and due to that disturbance, there is only 7% growth. If I remove 5%, the traffic growth is only 2%. But I think that was the temporary in nature, and that will basically improve in the coming quarters. Now, moving to the IRB asset, Ahmedabad Vadodara has delivered a 5%, around 10% revenue growth. 5% was contributed by the traffic. Mumbai Pune I have already explained because of the was some work going on expressway, and the connector route to the NH4 was closed for temporary basis. That has led a very slow growth on the Mumbai Pune. I think the traffic growth still remains robust, and we expect that the traffic will grow in line with the GDP, or even if GDP is growing at faster speed, it can be a correlate between 1 to 1.1 times to the GDP.
Understood. The next question that I had was more on the private InvIT. When you said 10,000 crores of debt is, this is the gross debt number, right, that you're focusing upon?
Yes.
And is there any standalone entity over here? As in, is this only a combination of project level debts that we should be considering, or is there any other element beyond project debt that we need to consider?
See, Aditya, as of March, all the debt were at project level. And as we have discussed in last phone call also, we are in process of migrating some project level debt to the trust. But as on March, all the debt were at project SPV level only. And in project SPV debt also there are two kind of debt. One debt is which is external debt. Second debt is debt extended by the trust. So that we should not count while counting the project level debt, because that is debt extended by the private InvIT itself.
Okay. Could you give me a sense of how much support has been given? So what is the inter-party number on an aggregate basis? So let's say if 10,000 crores is the net external debt, what is the add-on support given from the parent to these assets?
There is no add-on support required for the private InvIT asset. And when we did a transaction with GIC, the proceed utilization was 3,000 crores of debt prepayment at the SPV's level. And that whatever the money was raised, 3,000 crores was utilized to prepay the debt at SPV level. It was not kind of shortfall funding, it was prepayment of the debt. And that 3,000 crores debt was prepaid and that was funded by way of unit capital at trust level.
Sure. I guess I do require the debt numbers on a project level basis, either on the call or otherwise I can take it from you because our numbers were slightly higher. But up to you whether you want to disclose the debt numbers of these 8-9 projects right now, or we can probably do it offline.
The total debt is close to 9,700 crores. 9,500 crores. It's already part of the presentation. And it's on there on slide number 33. But as you rightly mentioned, you want a project-wise debt. We will share the same. The 9,500 what we have mentioned, it's a net debt. Gross debt will be roughly 9,700 crores.
Got that. I'll take it offline. Thank you.
Thank you, Aditya.
Thank you very much. As there are no further questions, I would now like to hand the conference over to Mr. Virendra Maheskar for closing comments.
So, would like to thank all the callers and shareholders who participated in this call. We wish you a good week ahead and hope to see you on the next call as well. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. We thank you for your participation and for using ResearchWise conferencing service. You may please disconnect your lines now. Thank you and have a great day.